Hello everybody, how are y'all doing? I hope y'all are doing great. This is Pete from InStock Trading, and in today's video we are going to talk about forex terminology. So this is a video I've been wanted to make for quite some time because a lot of people often ask me this question. Hey, you are saying this word. What does this word actually mean? So that's what we're going to explain today. So I'm going to try my best to cover most of the important words when it comes to forex. Definitely I would not be able to cover everything, but I'll try my best to cover most of it. And what will happen is I'll try to make a part 2 of this video where I cover more regarding the forex terminology. So the first things that we are going to cover is definitely the most important part, which is the pip. Have you heard of pip? Definitely when you talk about trading, you heard a lot of pip. So what is actually pip? Pip stands for point in percentage. So most of the times pips is measured in 4 decimal places, but for example sometimes in yen, any currency regarding yen, USD yen, on all this currency, it's usually measured in 2 decimal point. So let's take an example. For example, euro USD over here, so this point over here is 0.0398, so it's gonna be 1.1.080838. So this is this point, and this point over here is 0.8377. So 1.08377. So usually, like I told you, pip are measured in 4 decimal places. So 1, 2, 3, 4. So this is the one that we are going to calculate. So what is the difference between both of these? It's actually somewhere around 2 pips. So this is what we call, as you can see, 9 minus 7, it's 2 pips. So that's what we call as pips. It's just a rough idea of pip. So let's go for another currency pair where we go USD yen. Oops, sorry, USD Japanese yen. I almost forgot the currency pair. So when we go to USD Japanese yen, usually anything related to yen, the pip is measured in 2 decimal points. So let's take an example of 0.839. So it's going to be 109.839. So it's going to be there, and this one over here is going to be 0.818, 0.1, so it's going to be 818. So like I told you, in USD Japanese yen, it's measured in 2 decimal point. So usually it should be 1 2. So over here, and the difference between this is somewhere around 2 pips. So that is how you actually measure pips, and that is what pip is. So we have actually covered what is pip is. So next thing we want to talk about is also a very common terminology that we always use, which is the stop loss and take profit. You always been heard me saying, hey, place the stop loss, so place the take profit. So what is actually a stop loss and take profit? Okay, so usually you can actually go ahead and set these things automatically, and any brokers, most of the brokers allow stop loss and take profit. So how it happens is, for example, you are opening a trade for USD Japanese yen, for example, somewhere around here, you are opening your trade. So this is 109.755. So what you're going to do is you are going to place a call signal. So you're going to place a call signal where you are going to earn money when the signal goes up. So what you're going to do is you're going to place a stop loss of somewhere around 19780. So you're going to place a stop loss over here. So this is where you're going to place this is where you're going to place your take profit. So when we talk about profit, when you talk about your winning, it's take profit. When you talk about you're losing, it's stop loss. So this is where you're going to place your take profit. So what happens is when the trade goes from here to over here, you will automatically close your trade in victory, and you will not earn more than this. For example, you will only earn the amount subjected to this particular take profit that you have already placed, even though the trade actually went until over here, and it actually went until over here sooner or later, but you will only earn the amount over here. Some might be thinking, hey, this is actually bad. So what happens if I don't place take profit? What happens when you don't place take profit is sometimes you will not be earning a lot. For example, let's say I'm going to show you why placing take profit is very important. For example, let's say you place your trade, this is a good one. So you place your trade somewhere around here. Okay, you place your trade somewhere around, no, somewhere around here. So you place your trade somewhere around here on a put signal, so on a call signal, for example. So what happens is your signal goes around here, and over here you have already starting to earn money because your trade have already gone up to a call signal over here, right? So you are supposed to earn money already. But in case you never press any take profit, what will happen is your trade goes back around here, and this is not a long time, guys. This is somewhere around 8:28 up to 8:49. So less than 20 minutes, the trade goes back down. And when the trade goes back down, what happens is you will not earn money because you are now in the losing position. But if you actually placed a trade take profit over here, what would have happened is you would have win. And always remember that you are not a robot. You cannot consistently monitor your trade 24/7, and that is why we actually use take profit and stop loss. So we have talked about take profit. So the stop loss is actually exactly the opposite of take profit. So take profit is when you set a certain amount so that you can win that particular amount. Stop loss is you set a certain amount where you're not going to lose more than that amount. For example, you have actually placed a call signal somewhere around here. So you have actually placed a call signal somewhere around here, but things looks very bad and it's actually going down. The trend is going down, so you don't expected this. So what happens is when the trend goes down until here, you tend to lose a lot of money if you don't place a stop loss. For example, if you placed a stop loss somewhere around here, what would have happened is the utmost amount that you're gonna lose is the amount when it actually reach over here, and you will not lose more than that. Once you reach this point, your trade will be automatically closed. So this is how take profit and stop loss work. It will automatically close your trade regardless of how much you win and how much you lose. So this is very important in order for you not to lose a lot as well as to make consistent profit. So usually most successful traders, they are usually very keen on using the take profit and stop loss. In fact, myself, I will never place a trade without a take profit as well as a stop loss. So next thing that we're going to talk about is leverage. So what is leverage? You always hear the word leverage, right? So basically leverage is how much you can actually trade, how much larger that you can actually go ahead and trade for your original account, from your original account. For example, let's say that you actually invested somewhere around 10k USD. So when a broker actually gives you a leverage of 1 to 50, for example, you can actually trade up to 50k USD, even though you only actually deposited somewhere around 10k USD. You can trade up to 50k USD. So this is what we call as leverage. A lot of people actually says that leverage is the broker borrowing you some money, but relatively they are not borrowing you any money. They're only giving you a leverage where they actually don't go ahead and give you a amount. Hey, take this 50,000 and go ahead, take this 50,000. You only deposited 10,000, but you're getting 50,000. They won't do that. So it's only about leveraging. So this leverage is very important in the sense of it can actually give you a lot of profit, and it can even turn against you. So that's why we call leverage as a double-edged sword. If you used properly, it can actually give you a lot of profit, but if you use it very badly, you might end up losing a lot of money. So that is when we talk about leverage. So a lot of people also ask this question: what is spread? What is actually spread, and why actually how do the broker make money? So when we ask about what is spread and how do broker make money, is broker makes money via spread. So if you want to know what is spread, you need to know first what is actually a ask and a bid. So a bid is the price that you can actually go ahead and sell a particular currency pair, while ask is the price that you can actually go ahead and buy a particular currency pair. And the spread is actually the difference between the bid and ask. You should always keep in mind that the bid is always lesser than the ask, and the ask is always more than the bid. So you have to keep in mind, this is something which is very common, and this is something that you should always keep in mind. Sometimes you might see, for example, I can only buy at, for example, let's say I can only buy at 0.90870. I can only buy at this I can only sorry, I can only bid at this amount, but I can only buy at an amount lesser than this. For example, let's say I can only ask for this amount. So you are actually losing some money over there, and this difference is actually the way that the broker actually makes money. Nobody is going to do services for you for free, so the broker needs to make money as well. So they actually make their money with the spread, which is the difference between the bid and the ask. So that's how the broker usually makes money. So the final two things that we're going to cover is, I don't want to make this thing a little bit long. There's a lot of terminologies that I can actually go ahead and cover, guys, but it's going to make this video really, really long. So the next two things that we're going to talk about is technical analysis and fundamental analysis. So we're going to talk about the technical analysis and the fundamental analysis. So what is actually a technical analysis? So technical analysis, when you are doing this, you are actually seeing the chart, you are actually spotting the resistance points, you are actually go ahead and spotting a resistance points in the chart. For example, you are checking the movement of calendar, you're checking the movement of the candlesticks, and then you are using indicators and all these kind of methods that you actually analyze the movement of the candlestick is what we call as the technical analysis. And when it comes to fundamental analysis is when you go ahead and check out the news, you read the news. Anything not related to the chart is what we called as fundamental analysis. So the best practice that you should do is you should actually combine both fundamental analysis as well as technical analysis. When you combine the fundamental analysis and the technical analysis, it will give you the best position that you can actually go ahead and enter the trade, and the best position that you can go ahead and exit the trade. So that's what professional traders use. So to make your life easier, this might be a little bit complicated for you. So to make your life much more easier, it's very simple, guys. This is where you can actually go ahead and use the automated trading softwares, and the best one that I would highly recommend is definitely Crypto Masterboard. What Crypto Masterboard will do is Crypto Masterboard will do the technical analysis part for you. So mostly they will actually combine the technical analysis as well as the fundamental analysis for you, and what you should do is you should go ahead and do your part on the fundamental analysis, and then when you go ahead and place some trade with the Crypto Masterboard, what will happen is they will know exactly where to enter the trade and where to exit the trade properly. So if you ask me, is it going to give me 100% win rate? Definitely not. If somebody says it's going to be 100% win rate when it comes to trading, you should know that they are absolutely trying to scam your ass off. It does not work like that in trading. But the best part about trading software is that a good trading software actually tries to mitigate the risk, try to lower the risk and increase the percentage, the winning percentage, as much as possible. And Crypto Masterboard does the best work in it, and it is the best automated trading software that I was using in the year 2019. I still think that it is, until now, it is still considered as the best automated trading software out there, because there's no other software that came to beat the reputation of Crypto Masterboard. And the best part is the Crypto Masterboard is still open for public. So if you want to get access to Crypto Masterboard, all you got to do is just go ahead, clear your cache and cookies all time. Once you have done that, go to the description of this video. There's a link stating Crypto Masterboard. Click on that particular link, go ahead, sign up, deposit, verify your account, and start making money. I'll definitely make another video part 2 on this forex terminology and explain more about forex terminology that you should actually know before you start trading. And this is PD from Instock Trading, and remember to invest safely always.